Welcome to weekly view on markets. Nifty and Bank Nifty lost 0.58 and 0.28% during this week, while mid cap and small cap indices gained 1.68 and 1.49% respectively. Charts do not show any clear trend for the market in the near term. Third quarter results were lackluster and near term earning visibility is not very clear with the hangover of Trump tariffs, threats, and emerging geopolitical situation globally. Markets are set for some more consolidation under these conditions. Many stocks have corrected up to 40% from their highs. Investors can prepare a list of good quality stocks and buy them in a staggered manner. Mutual fund SIP investors need not to worry about the correction as they will get benefit from the correction by accumulating more units at lower levels. Long-term prospects for investors remains very good. The present period is a testing time for the patience of the investors, and patient investors get rewarded in the long term. So please be remain invested, be patient. You will get good returns from the market. Now let us look at performance of indices for this week. Nifty has closed at 22,795 with a loss of 133 points. Bank Nifty has closed at 48,981 with a loss of 118 points. Mid cap indices closed in the green with a gain of 832 points, that is 1.68% gain. Small cap index has closed at 15,636 with a gain of 229 points, that is 1.49%. India Wix is at 14.53. Now let us look at performance of different sectors. There were equal number of sectors in the green and equal of number of sectors in the red. Metals gained around 5%. Public sector stocks gained about 3.36%. Energy stocks gained about 3.34%. Commodities sector gained about 3.22%. Oil and gas sector gained about 2.25%. PSU banks gained about 1.67%. Which were the losing sectors? Auto sector lost 2.55%. Pharma sector lost 2.05%. FMCG sector lost about 1.96%. Information technology lost about 1.86%. Healthcare sector lost about 1.52%. Private sector just consolidated with a loss of 0.15% loss. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see Nifty is trying to form a base around 22,000 to 22,200. So 22,000 looks like a good support for Nifty under present circumstances. And by looking at the formation, I don't see any quick upside for the markets. And if Nifty goes down below 22,000, we may see a quick bounce back. This is the chart of Nifty mid cap index. Mid cap index has closed below this support level. It has broken the support level and it has gone down and taken support at around 49,000. From there, it is started coming up and now it has to cross this resistance line. Earlier support line has now become resistance line. So it has to cross 52,000 conclusively. Then only I will have a positive view on Nifty Midcap. This is the chart of Nifty Small Cap Index. This chart also looks more or like Nifty Midcap Index chart. It has broken the support of 16,000 and it has gone down. It has taken support at around 15,000. From there, it is coming up. If it crosses 16,000, then I will have positive view on Nifty Small Cap Index. We will have to wait for another week, that is for the upcoming week, to see whether it will break these resistance and go up, or again it will correct further. This is the chart of Bank Nifty Index. Here, Bank Nifty is trying to consolidate around in the range of 50,500 to 48,500. This is the broad range in which Bank Nifty has been trading, and it should cross this 50,000 level. After that only I will have a positive view. Otherwise, Bank Nifty may correct further from the present level. Indian macroeconomic fact- parameters continues to remain good, but the earning visibility of the companies and GDP growth rate at present is slightly subdued, and there is no clear visibility about the growth of economy and also the profitability of the companies in the near term. There are global overhangs due to the Israel-Hamas conflict and Ukraine-Russia conflicts. Also, Trump administration has been trying to build a tariff on all international trades. So this is going to affect the global trade. So because of this, several companies' earning visibility factor is not very clear at the present. And this is where the markets are trying to factor in uncertainty. That is why we see kind of nervousness in the market, and market is refusing to go up. At the same time, we are seeing some support at lower levels, buying by domestic investors. RBI forex reserves is at 635.7 billions. It is down by 2.5 billions for this week. Dollar forex rate is at 86.71 and dollar index is at 106.79. Dollar index had hit 108. From there it has now slightly come down. That means the high demand for dollars is slightly coming down. Therefore, rupee, which had hit almost 87 rupees per dollar, has come down slightly. It is at 86.71. Brent crude price has come down. It is at 74.25 per barrel. Gold price is at 86,020 for 10 grams 24 carat. Whenever there is a crisis, the dollar becomes stronger and all other emerging market currencies, including Indian rupee, gets weaker. That is one fact. And second is the gold prices will go higher during when growth prospects are not very clear. The future uncertainty prevails globally. At that point of time, there is a demand for gold. So we have seen gold surging from around 80,000 level to 86,000 level in a short period of time. FIIs have sold 7,793 crore during this week, and DII have bought 16,581 crore in equity during this week. Despite the domestic institutional investors buying, the market has gone down. That shows the nervousness among the HNI and retail. Q3 result season is over. December quarter result season is over. The results were very tepid. It was lackluster. Overall revenue of the company was just up by 6.9%, and profits were up just by 13.8% overall. Whereas market was expecting a revenue growth of around 14-15% and profit growth by around 18 to 20%. The market was valued considering this type of growth. Now the growths have now the growth has reduced. The markets have started correcting, adjusting to the slower growth rate. Large cap revenue is up by on just 4.1%. Profits are up by 15.3%. And large cap index is trading, that is Nifty index is trading at P of 20.26. Considering a revenue growth of just 4%, the market looks overvalued, P of 20.26. Mid cap index, that is revenue is up by 6.6% and profits are up by 37%, and it is trading at a PE of 34.34. Considering the growth in profits and revenue growth of just around 6%, still the valuation looks higher. But among all the indices, the mid cap companies have done better. That is why we see more buoyancy in mid cap index. In the small cap revenue is up by 6.5% and profits are down by 4%. It is trading at a PE of 26.79. Because of the degrowth in profits, we see a sharp correction in small cap index in last about 20 days. Market valuations look high even after the correction as corporate business growth and earning visibility has been reduced. There is no clarity on earnings growth in the near term coming months. That is why market is worried. Unless the earnings of the companies pick up, we may not see significant upside in the market. Correction and consolidation may continue for some more time. But it is good for time for investors to pick up quality stocks. Staggered investment is suggested, and mutual fund investors should continue their SIPs. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.